Okay, here's a decent 3-bar reversal, but when you look at the other 5-minute chart that you're depending on, prices closed below all 3 moving averages and they're all pointing down. I mean, sometimes you can get the absolute best price when it happens, but I would prefer things to still look bullish, still kind of be bullish, or at least mostly bullish. You had the 8 and 20 coming down, but you had the 50 coming up. And, you know, a lot of times things will bounce like that. At least the 50 going up, but now the 50 is ticking down and I'm not interested in doing it. So you just wait. So like down here, you have the 8 going up, the 20 going up, and the 50 going up. This is where this thing come down when the 8 and 20 were above the 50. So that's great. If we go study that pintail right there, I bet you anything, it was a great 3-bar reversal on it. So I'm going to go look at that real quick and see what it looks like. Absolutely, the 5 minutes got it, everything going. So when we come over here to the 500 tick chart, this is what it looks like. Excellent. Okay, so let's take a look at it closely. Yep, that bar closed above the previous 2. Get in there and you got massive profit on that. And if you'll notice, you've got the 8, you got the 20, the 200, everything's looking good in perfect order. The 20 and the 50 are in order. The 8 dipped down. That's okay. I don't mind. As long as the 20 and the 50 are going up like that. I guess that would have been difficult because if you notice, you just got to use your discernment, I guess, discretion, because here we have the 50 coming down. Here we have the 20 coming down. And that's the same thing I'm complaining about right now. It's underneath all 3 moving averages. But we're going to be using other elements to give us a better understanding, which is the fact that these moving averages are all still in order above one another in the proper order. And we're using this time chart over here. We saw that the 8, the 20, and the 50 had been in perfect order. So when this thing came down, using the 5-minute chart and using this kind of feel over here on this gives us a better quality. Let me take a look at what it looks like over here. And if you're looking at the 10,000 tick chart, you know, this is not really that good. Only thing you have in this area is that price had gotten above the 8 and the 20. And you can see the curvature of the 8 and the 20. 50, you know, if you're going to be using, you know, I like it. I prefer when the 5-minute chart and the 10,000 tick chart all agree, and then we find something on the 500. That's the best A+ setup scenario. But B+ setups will be when I can only get the 5-minute or I can only get the 10,000 to agree with the 500, and it's not a A+ setup. It is a B+ setup though, and it's still pretty good, but the likelihood of it failing is greater, and so we have to be a little bit more careful with those kinds of setups. The problem with developing the trading strategy is when we look at the charts, we see things that are working and we say, that's my strategy. I mean, I really do love when the 5-minute and the 10,000 tick and the 500 tick are all lined up. Everything's going in the same direction, like this right here. When everything crossed over the 8, the 20, and the 50, it started consolidating, started pushing up higher on the 5-minute. It also looks that way on the 500 tick. And when it's doing that, then I'm looking to go long. For instance, right over here, everything crossed above the moving averages. Started to cross above the moving averages here, tested, but then it closed, tested, and it kept closing above, trending up, expanding. When the moving averages start to expand and you get a dip and a close above, that's the buy signal. As long as the 5-minute chart is agreeing. Okay, say that's my trading strategy. That's one of my trading strategies, the expanding moving average strategy. I got it. But when it's not doing that, like right now, things have fallen in the middle. I call that, the caution zone. And you got a wick to the top, you got a wick to the bottom, you got a wick up here pointing it down, you got a wick down here, and you got this consolidation. That's time to stop. And I got to go, okay, I can't do my expanding average. Should I be looking for a trend line break or a trend line break to go back up? And it gets more dangerous. Sometimes the strategy looks crystal clear, I guess is what I'm trying to say. Sometimes it's pretty obvious. It's really clear to see. Everything's bullish. Let's go long. And then there's times when we don't exactly know what it's doing. And I got to get that through my head to not trade. Um, yeah, not trade if I don't know what's going on. So right now I'm liking the 10,000 tick chart. Price is above all the moving averages, above these red lines, which is important pivot levels, above this trend line. And it's above all the moving averages. And the moving averages are in proper order. So this is telling me to look for longs. Okay, I'm okay with that. If we get a close, we should be looking for a trend line break here. All the moving averages are in order here on the 5 minute. So yeah, I guess I should be looking for a trend line break here and some kind of a bullish signal to go long. Okay, on the 500 tick chart, we have a close above all the moving averages right here and a close above the trend line break right here. This is actually a buy signal. I'm a little concerned though that it's not closed above all the moving averages on this. It's getting stuck on the 8 and the 20, and there's some pintails right here. But to find an absolute perfect setup without any resistance or any struggle for it is very difficult. You got to kind of just reduce your risk and let's go for it. So right here, I'm looking forward to try to go over the top of that, and wherever this pintail is here, I'll use this. You could use a stop all the way down to here using the trend line and the moving averages. I could try to get in it now. I could try to get in it as it comes back down to test, and then my stop loss will be even less. I think that's what I'll probably try to do, keeping my risk even lower. Let it come down here and test. I could use a limit order to get in this thing. And let me try that. So let's do a buy market limit, buy limit.
Order submitted.
And see if it comes down and tests right here. If it does, I'll get in, and my stop loss can be down at okay, it's going up.
Order filled.
Okay, I'm going to get in because it popped up over that. My stop loss is going to be underneath where that
Order canceled.
candle came in. And if it gets me, it gets me. Okay, my stop is underneath that candle that reversed real quick. I don't know if that's good, but that's where it is. I'm going to try to get it back up to these highs here. And let's see what happens. I'm taking a trade where everything looks pretty good. All right, and so this is a good quality trade. My problem is taking trades that are not high quality trades and just wanting to trade for the sake of trading. That's got to stop. Waiting patiently for good trades. And I tell you, if you feel that frustration, anger, the emotions like that when trades don't go your way, I better cool my jets, because all that's going to do is tempt me to trade recklessly. And so, yeah, it stopped me out, no problem. But I did save a little bit because it kept chopping around with the strong green candles, and every time I would put in a pivot, I would just raise it up to that next pivot. So instead of stopping out way down here, I stopped out right here, and I'm okay with it. I don't want to be in the trade if it's not gonna move. Depending on, plus the bell's going to open here in 15 minutes. So we'll just wait till the bell opens. I figured if it was going to run, do a pre-market run like that, I'd be happy to get in there. Something else I noticed too, we've got to be very careful today because it went over previous day's level, opened, and it came right back down. So it's below yesterday's level, and it's a red candle, and it's bounced up high, and it's in the middle. It is going to be a very tricky day, I would think. And I'm trying to go follow my rules, but the expanding moving average strategy, moving averages are pointless and useless in a consolidation choppy market. They really are. So either use a different strategy or don't trade. And there lies the temptation, because I do have other strategies and I do have other ways I like to trade. But again, if frustration is in my heart, it's going to be bad. So I have to trade with rules and principles and a freeness, or don't trade at all. So if I was to change my direction, everything was cool when everything was closing up here above all the moving averages. But if they were to rotate down, consolidate, and keep pushing down, then I've got to wait, because I can't take a trade when this is going down. I can't wait. I got to wait till it looks strong on the 500 tick. And now we have everything coming down. It was in the caution zone, failed to break out, and now things are rotating underneath the 50. And this is the danger zone. So, and when you get the 8 and the 20 pointing down like that, and the 50 flattened out, you got to put pause on it. You got to put a pause on it. So, we got to be real careful. Plus, we're looking at the 10,000 tick chart, and to keep an eye on everything to kind of keep us in line with what's going on. And the moving averages are still in order, but it's so consolidated right here that, all that together is telling me just to wait on the moving average strategy. Do not trade that. So like I said, then I'm like, well, I really want to trade. Do I want to trade out of frustration? If I do, I shouldn't, because there are other strategies. You got the 3-bar reversal strategy, which could work. But like I said, I don't think I'm going to take a trade until the market opens in 15 minutes. So I might trade a 3-bar strategy, reversal strategy, 3-bar reversal strategy, because that works good in consolidation. And with support structures, price structure, support structures like that. But other than that, I might just sit on my hands. All right, see you on the next video. Just a quick example of a 3-bar reversal. It's best on support structures, which it did, bounced off the red line there, and all this consolidation here, which is nice. So I figured I'll give it a try in a 3-bar reversal. Here was a 3-bar reversal. That candle closed above the previous 2 candles, and one of those previous 2 needs to be the low. So when it closed, I waited for it to come down. If I would have got it on this pintail, I would have been profitable. But I didn't, and I almost pushed the trigger. I got it up here, and it started to go up. I moved my stop to break even, and it came back and stopped me out for break even. Because it's a riskier trade, I'm going to break even as fast as possible. I don't want to try to hit a home run on it. It's riskier trades. Break even faster, look for 1-to-1, don't try to get a home run, and good quality setups, hold, baby, hold for the run. But I did take it, it did break even. It would have worked if I had gotten in on the pintail part. Here's another example of a 3-bar reversal. If you count, the pintail is the lowest, and the bar that closes above the previous 2, 1, 2, one of those 2 have to be the lowest. Okay, so we have a bar that closes above the previous 2, and one of those previous 2 is the lowest point. So if we would have got in on that, if we would have got in up here, stopped down here, we would have had plenty of space to create a profit. But the 3-bar reversal has to be in support. And let's see, that time it was on this 50 moving average and also into this consolidation area. So that would have been a good 3-bar reversal moment. There's probably a 3-bar reversal on this pintail if we go study it closer. Let's go take a look at that. I like the here it is. Let's take a look at it right here. Remember the previous 2. So this bar closed above the previous 2. One of them was the lowest. You get in right there, stop under there. Plenty of room for profit on that. And there you go. So it has to be in support, though. You can't just jump on any 3-bar reversal. Here's a 3-bar reversal on the 10,000 tick chart. You can see that candle that closed above the previous 2, and one of those previous 2 was the lowest. And you can see clearly, even if you got into the top, put your stop here, you got plenty of room to get profit on that. So it's pretty good strategy. You can see it right here as well on the 2,000 or 5,000 tick chart. Double bottoms are okay. They count for the same pintail in my opinion. The bar that closed above the previous 2 and plenty of room to go up there. You got it right here as well. This bar closed above the previous 2. Get in at the top. Stop loss, 1-to-1 target. Works pretty good if you can bounce the 3-bar reversal off of a decent area. Okay, here's a decent 3-bar reversal, but when you look at the other 5-minute chart that you're depending on, prices closed below all 3 moving averages, and they're all pointing down. I mean, sometimes you can get the absolute best price when it happens, but I would prefer things to still look bullish, still kind of be bullish, or at least mostly bullish. You had the 8 and 20 coming down, but you had the 50 coming up, and a lot of times things will bounce like that. At least the 50 going up, but now the 50 is ticking down, and I'm not interested in doing it. So you just wait. So like down here, you have the 8 going up, the 20 going up, and the 50 going up. This is where this thing come down when the 8 and 20 were above the 50. So that's great. If we go study that pintail right there, I bet you anything, it was a great 3-bar reversal on it. So I'm going to go look at that real quick and see what it looks like. Absolutely, the 5 minutes got it, everything going. So when we come over here to the 500 tick chart, this is what it looks like. Excellent. Okay, so let's take a look at it closely. Yep, that bar closed above the previous two. Get in there and you got massive profit on that. And if you'll notice, you've got the 8, you got the 20, the 200, everything's looking good in perfect order. The 20 and the 50 are in order. The 8 dipped down. That's okay, I don't mind. As long as the 20 and the 50 are going up like that. I guess that would have been difficult, because if you notice, you just got to use your discernment, I guess, discretion, because here we have the 50 coming down. Here we have the 20 coming down. And that's the same thing I'm complaining about right now. It's underneath all 3 moving averages. But we're going to be using other elements to give us a better understanding, which is the fact that these moving averages are all still in order, above one another in the proper order. And we're using this time chart over here. We saw that the 8, the 20, and the 50 had been in perfect order. So when this thing came down, using the 5-minute chart and using this kind of feel over here on this, gives us a better quality. Let me take a look at what it looks like over here. And if you're looking at the 10,000 tick chart, this is not really that good. Only thing you have in this area is that price had gotten above the 8 and the 20. And you can see the curvature of the 8 and the 20. 50, if you're going to be using, I like it. I prefer when the 5-minute chart and the 10,000 tick chart all agree, and then we find something on the 500. That's the best A+ setup scenario. But B+ setups will be when I can only get the 5-minute, or I can only get the 10,000 to agree with the 500, and it's not a A+ setup. It is a B+ setup though, and it's still pretty good, but the likelihood of it failing is greater, and so we have to be a little bit more careful with those kinds of setups. Okay, I'm going to record all my trades. Boy, it's such a choppy market. I'm seeing price consolidate underneath the 8 and the 20 on the 5,000. But right here, again, such a choppy. I'm seeing more weakness in it, so I'm trying to go short, but it's not an A+ setup at all. It really isn't. Look, this thing is just unbelievably choppy. We have the moving averages all underneath one another going down. We have lower highs taking place. Problem is, I got down. I thought this was going to keep going right here, and then it's whipping back up on me. So my stop loss is all the way up, though, up here, which is where this pintail was created on the 5-minute chart. It whipped up right here, and then it didn't, it came down sharply. So I'm hoping that that holds. If it doesn't, man, I don't know what I'm going to do today. I might just not trade, because this is not an A+ setup though, and I don't need to be taking trades that are not A+ setups today. So here it comes. Looks like it wants to go right up and stop me out, and it could add to frustration.
Stop filled.
There it goes. I'm stopped out, and yes, I'm frustrated. Okay, I'm trying to go long now, because I probably should not have taken that short, but I was fooled by this bearish looking tendency. But I also noticed that the 20 was above the 50 and the 8 was above the 20, so that was just a bad decision. More like I just wanted to take a trade than finding a quality trade. This bar closed nice and strong above a trend line, and all the moving averages are in proper order. And so we're going to try to go long with a stop loss underneath that pivot right here. So hopefully this one will work. If this one doesn't work, boy, the frustration is going to be really strong then. Okay, now we got a 3-bar reversal on the 5-minute chart, which is good. That's good news. And stop loss is underneath this bar here, so we're already in the trade. To me, that's a quality trade to set up there. We got an agreement with the 10,000 tick chart as well. So if it fails, I'm okay with that. It won't be as frustrated because I'm in a good trade now. All right, I'm just glad to make a profit on this one. Look at the 5-minute chart. Nice. Went over the pivot here. When it spiked up real sharp, I just took my profit. It was over a 1-to-1 on the big stop loss that I had down here at the bottom. So we got over a 1-to-1 on that. And when I moved my stop loss to here, then we could see that it really had a good risk reward, but that's not where my original stop loss was at. But, often, and I mean quite often, when I take my profits, it keeps right on going. That's just another, area I need to work on. But right now, I feel a lot of frustration in my tone, voice, and mind. So, I'm just going to take what I can get today. Today's a bad day. Got a lot on my mind, and they say not to trade when you're burdened with certain life's problems. So, I learned that the hard way yesterday. But all right, so I don't know if I'm going to take any more trades or not. All right, let's take another look at this trade I did. I went short because it was starting to rotate down here, and I thought it was going to continue. Everything's rotating down. I waited for it to come up and get in, and I stopped out on the first pivot. I didn't use this pivot. I just stopped, and it stopped me out. It reversed. Now look, it's right back up over the top of the moving averages. I almost wanted to short it again, and then I said, what are you doing? This is bullish. This is bullish. 5 minutes bullish. Don't try to force it to go down. And that can happen when you get revenge trading. So I caught myself. I said, don't do that. I knew it was a riskier trade anyway. Why? Well, I guess I was basically only using the 500 tick chart. That's it. I was only using this chart. And all the other charts are clearly, I don't mind trying to take a short when it's stretched out like this, though. It's okay. I did good. You can do good on that when you catch it. And what it was doing right here, it was starting to rotate down. So I figured quick, small stop loss. Give it a try. It's a B plus setup. It's not an A plus setup. It's a B plus setup. So the stop loss was quick and tight, going against the higher time charts, but kind of relying on the stretch. If you can get a good stretch on something and start to see it turn red, there's nothing wrong with trying to go short on it. Like this right here would have been interesting. It went up to that bar, and then it started to rotate. Oh, well, it's right here. That's what happened. That was the close of the green bar. Then the red bar starts going down. Here the thing is, this is a B plus setup. It's not an A plus setup. So if I do take a trade to the short side, it's going to have to be a real tight stop loss. Okay, just a quick reminder, if the 20 and 50 crossed underneath one another and they're heading down, that's not a buy. I got long and it faked me out because the 50 is going this way, the 20 is going this way. I should have been looking for a 3-bar reversal right here, would have got me a 1-to-1 on it. So if the moving averages are going up in the right direction, then we buy, right? If they're coming down on the breakouts, then you can't buy. If they're coming down on any kind of breakout, they might work, but it's better to buy the 3-bar reversal down at the bottom. Coming down, fake breakout. 3-bar reversal works. Okay, so let's just remember that then. Okay, I just realized something. If I see a potential setup like this one, consolidating right here, and it looks like it wants to go up. Now, if I bet that it goes up, and I put my stop loss down here, if I bet it goes up and it fails, I get stopped out, I lose money. I lose money if I bet it goes up and it goes down. Okay, now, if I wanted to pull back first, if I'm betting this is going to pull back first, and I put my buy order somewhere in this area, right? If I'm betting that it comes down first and it doesn't, it goes against me, I don't lose any money. I'm going to say that again. If I bet it goes up and it doesn't and it comes down, I lose money. If I bet it comes down here and it doesn't and it goes up, I don't lose money. Of course, I'm risking not making any money, but one of those bets loses money or just simply doesn't make any money. Okay, so it seems like a good idea if I could have the patience Because how many times does it come back down, right? Seems that if we can identify a pretty bullish day, and we are above previous day's level, and we are definitely bullish on the 5-minute chart. 10,000 tick chart looks bullish too, very bullish. If we're bullish, then we could let a pullback take place and get it at a better price. Somewhere down here would be good, even if it comes down here. Because once it's close to the highs, and it gets closer and closer to the highs, then the chance, what is your profit target? You know, there's no guarantee this thing's going to keep making higher highs and higher highs, especially when it's consolidating. You know, it could go up, but why not wait for it to come back down? So I think that's what I'm going to do here, taking a chance of not making any money, but I want it to pull back first. Well, let's take a look at that trade now that it's completely played out. Boy, was I, shall we say, lucky. I took my 2-to-1 return, and I'm glad I did. As soon as I did, the whole thing started coming down, and guess what? It would have stopped me out for a full loss. I would have been so mad to give up 2R return and had a complete collapse and a full stop loss. Now, we took that trade, and I like it. Let's take a look at where it was looking like when I took the trade. Okay, we had everything agreeing with one another that it was bullish. So I waited for it to pull back like I was saying. I said, why should I try to go for the breakout? It's probably just going to come back. When it did, I let it close back above the moving averages, and I got long after the sweep down. And then I got a 2-to-1 return on it. And sure enough, the thing would have stopped me out. What did that look like on the 500 tick chart? Well, right there's my entry after the breakdown. You know, I was thinking about getting long here and putting my stop right there. It would have stopped me out before going right back up. So I like the idea. I hope I can continue to be disciplined and patient to wait for these kinds of pullbacks before I get into trade. Wouldn't that be good if I could just master that? Yes, we're going to miss a lot of momentum trades, but not losing money is a win. Not losing money is a win. So I like that. Okay, so right here on the 2000 tick, price closed above all the moving averages. You can see the moving averages all going up. As soon as it closed above all the moving averages, we got long, and we got out at 2-to-1. Thank goodness. Cool. I am glad that I took that trade. Now we've got a situation where it's in this, you know, kind of like this consolidation or caution zone. When it's between the 20 and the 50, especially over here now, we can't really take a trade. See how the moving averages were all curving up right here, closed above it. Everything's going down right now. So to buy now is not a good idea. If it starts to sort of curve around and curve back up, that's a better. It doesn't mean it's going to work, but that's certainly better than right now. So we have the 20 starting to flatten out, the 50 still coming down, right? So if the 20 can cross over, I'd like to see the 50 ticking up. I want the 20 and the 50 to be going up. And if that, you know, corresponds to a trend line break, then we got a trend line break and the 20 and 50 both heading in the right direction. To me, that's a better chance.